It's natural that any asset of this size and liquidity has an ETF. I mean, there are triple short NASDAQ ETFs. There's like an ETF for anything you can think of, including really bad ideas, because people either trade them or hold them. And so it's natural that Bitcoin would be an ETF. And it's integrated into the system. And of course, it's good to tell people, like, if you can help it, try to hold the actual thing. If you got, if you're locked into a brokerage or an RIA or your IRA, and you want price exposure, this is a useful vehicle. But I think it's more just like it gives you some legal cover. And one thing that the lawsuit showed was that one is the government's not a monolith, right? So if you look at the SEC, for example, there's already been division in the SEC between Gary and Pierce, Gensler and Pierce. And even this vote was like 3-2 on whether or not they'd approve it.
In an age where Bitcoin's impact is increasingly recognized worldwide, prominent financial analyst Lyn Alden provides a compelling outlook on the future of this groundbreaking digital currency. Amidst recent headlines concerning Bitcoin ETFs and the ongoing debate surrounding its role in the financial system, Alden's insights become more pertinent than ever. She explores the intriguing concept of hyperbitcoinization, envisioning Bitcoin's potential emergence as a dominant global currency, challenging governments struggling to control their fiat currencies against Bitcoin's relentless influence. Alden's analysis delves into the intricate interplay between traditional financial systems and this burgeoning digital asset. As we witness Bitcoin's growing integration into mainstream finance, exemplified by the landmark approval of Bitcoin ETFs, Alden's thoughts on the legitimization and potential reduction of Bitcoin's volatility resonate profoundly. Her balanced perspective, acknowledging both the lofty ambitions for Bitcoin and the practical challenges it faces, provides a nuanced understanding of its scaling issues within the broader economic context. This video explores Alden's vision for Bitcoin's future, including her insights on the challenges of self-sovereignty in the digital age and the evolving landscape of cryptocurrency regulation and adoption. Her analysis not only sheds light on the current state of Bitcoin but also charts a course for its potential trajectory in the years to come.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think there's a range of outcomes. So I don't have a firm view on the very long-term end game. Basically, money is a competitive good that scales with network effects, and it's one of those things you rarely want to hold the second best money. You generally want to gravitate towards the first. In historical periods where there's been two monies coexisting for a long time, it's usually because one money is not sufficient. So for example, gold and silver coexisted because gold, even one tiny gold coin was more than like a laborer would make in a day or a week maybe. And so you'd have to have the smaller units. And so there are certain contexts like that where it can kind of reach its limitations. I think a big thing will come down to how good are governments at maintaining their own little fiat bubble against the constant push of Bitcoin. Right? We see, for example, developing countries that have inflation problems, they have the constant pressure of dollarization always kind of knocking on their door to kind of push in. And people there in those gray markets, they want dollars. And so, but they've been able to maintain their monopolies anyway because of the technology that's available. They can basically firewall their banks and they can firewall their ports of entry. Bitcoin and stablecoins start to pierce into that. And so you'd expect that over time, as liquidity and acceptance and knowledge of these types of technologies grow, particularly Bitcoin, it can pierce into all these things, and it's increasingly hard to maintain any sort of currency monopoly. But we still don't know the extent that they'll be completely dismantled from being able to do that, or what timeline if it does happen. So whether you look at it as a very, very large monetary asset globally, or virtually the only one, I don't really have a strong view. I think that's all still quite a bit out. But I have pretty high ambitions for what Bitcoin can do. When I got into Bitcoin, I had also been watching it, studying it for a while. So I went through a phase where I was interested but skeptical, to interested and convicted. Right, that was a transition I went through. And what I find interesting is that a lot of people are kind of almost come off as constantly surprised by the scaling challenges, even though they were laid out in 2009, 2010. If you look at Satoshi's original emails even before Bitcoin was launched, just on the mailing list, people were challenging the scaling. They were like, well, how is this going to scale? Or, Hal Finney was talking about Bitcoin banks in 2010. And so this has been, there's actually an old joke that basically like any kind of thing you think about Bitcoin, it's all been discussed on Bitcoin Talk in the first couple of years. And this is just another one of those things that's been discussed since like the literally pre-inception of the chain. And so for me, it's when I got in, I had the benefit. The downside is you don't get in at like $10 Bitcoin, but the benefit is you have years of history of kind of people discussing this and seeing how it's work and kind of understanding all the pros and cons of different approaches. So for me, it was understood from the beginning that it's going to scale in layers. And also, when I look at the existing financial system, we see it scale in layers. So for example, there's FedWire. It's the main, it's like the biggest, kind of U.S. settlement system. It's operated by the Fed. They settle $1 quadrillion a year, so $1,000 trillion a year, and they do it with about as many transactions as Bitcoin does. So in a given year, they do 200 million transactions, average of 5 million each, and so you get a quadrillion dollars in gross settlement, which sounds like a cartoonish number.
Alden explores the notion of self-sovereignty within the realm of Bitcoin, contending that absolute self-sovereignty is a platonic ideal, something conceptually perfect but unattainable in reality. In the Bitcoin world, this implies that while individuals can strive for a high degree of control and security over their assets, some level of trust in the system remains essential. She underscores the significance of having options and the freedom to choose the extent of control one desires over their Bitcoin holdings, whether through self-custody or by leveraging various technological layers such as the Lightning Network or federated side chains like Liquid. Furthermore, Alden delves into the challenges confronting Bitcoin adoption and identifies factors that can expedite its proliferation. She highlights the need for people to have incentives for certain actions, emphasizing that current economic and financial conditions provide an opportune moment for individuals to transition to Bitcoin. The video will now continue with further insights.
I think UX is going to be a big part of it. So in order to get people to switch, you generally need like an Apple-like UX, which of course is easier to do with custodial than non-custodial. That's kind of the temptation. That's the challenge.
Yeah.
It's also one of those things where people are more incentivized when they specifically have a problem.
Yep.
So for example, if your payments were blocked, you now have an incentive. Whereas if your payments are not blocked, you're kind of like, well, what's the point of this whole Bitcoin thing, right? Or if you're an American, you have access to dollars and you can also reinvest your dollars in the S&P 500, so you're not worried about even debasement of the dollar, really. You're kind of like, why is Bitcoin so important? I can just invest in the S&P 500. Whereas when you look around the world, a lot of people don't have that option, right? And so when people face blockages, when they face faster inflation, it's not surprising that when you look at, say, the Chainalysis Crypto Adoption Index, it's something like 16 out of 20 countries are developing, because they're generally the sweet spot is countries that are pretty tech savvy, but that have really inflationary money. And so, for example, Nigeria.
Yeah, I was just about to say Nigeria.
Yeah, there you go. And so they, for 3 years almost, their central bank banned banks from sending money to exchanges, crypto exchanges. And yet they were like ranked number 2 in terms of adoption. And they specifically were number 1 in terms of like peer-to-peer volume, because that's how they were routing around banks. And so when you're facing, 15% inflation year after year after year after year, you learn pretty quick. I would say anyone who can drive a car can operate Bitcoin, at least technically. It's just you learn and you know how to do it. Whereas if you don't have a need, it just seems burdensome to you. And so I think that's one thing. And the other part is just economic, right? So like you said, if you have $100 of Bitcoin, it probably doesn't make sense to pull that onto the chain, because your fees are going to be burdensome, especially when you have to consider the future. So if you pull that onto the chain and in the future, fees are more expensive, especially if they've risen kind of faster than the value of that Bitcoin, you could get stuck. I mean, fees could spike to $30, and you have a $100 UTXO. It's kind of blocked now, and so people have to kind of use that responsibly. And I think that Lightning can scale in the sense that if you're a power user and you want to use it fully non-custodially, you can. And one on-chain transaction can now give you access to multiple payments. So it's scaling on a per person basis, even though it doesn't necessarily scale how many people can access it. And then there's other things like you said, Fedimints and other technologies, and we'll see what other layers come. I mean, I'm interested in covenants, for example. We've seen developments on the Mercury layer. There's other things that can scale as well. We just kind of see what catches on.
The extent of fresh capital that the newly approved spot Bitcoin exchange-traded funds will attract remains uncertain. Despite the U.S. Securities and Exchange Commission's somewhat reluctant approval, market reactions have been relatively subdued. Attention has now shifted to the potential capital these new ETFs might draw. A Thursday research report from JP Morgan suggests that while optimism for a significant influx of new capital into the crypto space may be questionable, there could be a notable shift from existing crypto products to the newly established ETFs. Market analysts, led by Nikos Panago, expressed skepticism about the widespread optimism regarding the entry of substantial fresh capital into the crypto space following the spot Bitcoin ETF approval. However, the report acknowledges the potential for a significant rotation of funds from existing crypto products into the new ETFs. Even if no new capital enters the cryptocurrency market, the newly approved ETFs might still attract inflows of up to $36 billion. This projection includes approximately $3 billion potentially exiting the Grayscale Bitcoin Trust and migrating to the new spot ETFs, driven by investors taking profits after purchasing discounted GBTC shares in the secondary market over the past year. Moreover, the report anticipates up to $20 billion from retail investors transitioning from digital wallets held at crypto exchanges to the new ETFs. Grayscale's comparatively high fees could contribute to these outflows. The report concludes that unless Grayscale lowers its rates significantly, an additional $5 billion to $10 billion could swiftly exit GBTC in favor of more cost-effective spot Bitcoin ETFs. Institutional investors holding crypto in fund format might also shift from futures-based ETFs and GBTC to cheaper spot ETFs, particularly if GBTC lags in fee reduction. Share your thoughts on Lyn Alden's insights on hyper-Bitcoinization and Bitcoin's sovereignty in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.